Welcome back everyone, and in this video, we're going to take a look at 3 new ETFs with very unique investment themes that are trading on the market right now. All 3 funds are created to focus on a niche market that is expected to outperform the S&P 500. And these are actively managed funds, so they do come at a higher cost compared to a passive index fund. But they offer greater exposure to a unique grouping of stocks that may not be included in a broad market ETF. And for each fund, we're going to discuss their current investment philosophy and the fund's top holdings. But before we jump into the first ETF, I'm going to ask you, as always, to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos, and we're going to jump straight in to the first new growth ETF, which trades under ticker BUZZ or BUZZ. And this is VanEck's Social Sentiment ETF that currently trades for around $25 per share. And this fund is very new, and it just began trading early in March 2021, and their leading backer is Dave Portnoy. He is the president of Barstool Sports and is a very prominent member of both the sports and social media world. And he created a very strong marketing campaign to boost the popularity for Buzz when it first launched, and the ETF saw $280 million of inflows on their first trading session. In this Buzz ETF tracks the performance of 75 large cap US stocks which exhibit the highest degree of positive investor sentiment and bullish perception based on content aggregated from online sources, including social media, news articles, blog posts, and other alternative datasets. So essentially, this is an ETF that is built of 75 large cap companies where in the digital world, whether it be on social media or blogs or in the news, are getting positive sentiment from their investors. And some key notes related to the fund are that the recent history has shown that retail investors can actually outsmart Wall Street. And retail sentiment is tracked by monitoring millions of online interactions, and a consistent track record of discussions, not just short-term bursts, is required for inclusion in the index. So this fund is not going to own the pump and dump stocks where people talk about them for a few days, the stock price shoots up, and then comes crashing down. There has to be long-term, consistent discussion of positive news and positive thoughts surrounding a specific large cap company to be included in this index across many different social media channels, and every single day, VanEck and their algorithm are going to monitor millions of public interactions to figure out which companies investors are liking on social media. And one thing I like about this fund is that they are all focused on large cap companies. We're not getting into any risky penny stocks or small cap names. The minimum market cap to be included in this ETF is at $5 billion. And right now, the fund has around 416 million of total net assets and owns 75 different companies, and their expense ratio comes in at 0.75%. And the top holdings in this fund include Novavax, Boeing, Apple, Disney, and Amazon. And of these top holdings, the largest only makes up 3.2% of the total net assets, so it's nicely diversified across all their individual stocks. And the overall net assets of this ETF are spread out across multiple different sectors. And the big ones include information technology, consumer discretionary, communication, industrials, and healthcare. And the largest individual sector only makes up 23% of the over 400 million net assets that this fund currently owns. And overall, this is definitely a very interesting ETF that just hit the market. And I actually do like their investment philosophy. Scanning the digital world and keeping track of the companies who continuously receive positive sentiment may be a great way to find the next winners, and overall, I really look forward to following the performance of this fund to see if retail investors and their discussions online can build a portfolio or an ETF that can actually outperform the overall market over the longer term. And I might start a position in this ETF in my smaller, high growth portfolio. And now we're going to take a look at the second fund in this video with a very unique investment philosophy, and that is ticker UFO, Procure's Space ETF. They currently trade for $29 per share, and over the trailing 12 months, this fund has exploded up over 90%, which is absolutely incredible. They have 140 million of assets under management with a current dividend yield of 2.2%, which is a very nice bonus from a growth ETF. And since the beginning of time, individuals have always had a ton of curiosity surrounding outer space. But as of late, it has also captured curiosity of the commercial world like never before. And this ETF provides diversification beyond the limitations of solely earthbound companies. And of course, they trade under the very creative ticker UFO. They have an expense ratio of 0.75%, and they currently own 32 different companies. And Procure, the creator of this ETF, has laid out 3 different reasons to why this fund is projected to grow. Location-based service apps, including ride-sharing and food delivery, are rapidly growing because of the power of satellite-enabled navigation. Number 2, decreasing launch costs are helping to create an economically viable opportunities in the industries of satellite, tourism, and telecom. And number 3, with the new formation of the US Space Force, governments and the defense industry are poised to increase space investment over the next few years. So overall, those are 3 viable reasons to why the sector may continue to grow going forward. And this ETF invests at least 80% of their index is allocated directly to the companies who generate a majority of their revenue from space-related industries, and the remaining 20% is allocated to the companies who operate in industries that may emerge in the future, including space tourism, space resource and exploration, and space colonization and infrastructure. And right now, the fund's top holdings include Sky Perfect, Dish Network, EU Telesat Communications, Weather News, and Trimble. And overall, if you're interested in outer space and you believe going forward over the next 5, 10, 15 years, there's going to be a ton of companies generating billions of dollars of revenue from outer space and the tourism, exploration, and any other sector, then this is definitely an ETF to take a look at on the market right now that trades under ticker UFO and is solely focused on investing in companies deriving revenue and future revenue from outer space. And now we're going to continue on into the third and final unique growth ETF trading on the market right now, and that is ticker MVP, which is Round Hill's Pro Sports, Media, and Apparel ETF, and this is the first ever fund solely focused on the sports industry. They currently trade for $15 per share, and this is another fresh ETF that's only been trading for a few weeks on the market. And the MVP fund is designed to give investors exposure to the world of professional sports, and the holdings include professional teams, professional leagues, sports apparel, and media brands. And right now, professional sports teams and leagues are a premium and scarce asset that have a strong record of value appreciation, and with this fund, everyone can be an owner. And over the next few years, the global sports market is projected to be worth $626 billion by 2023, which is up 33% from their 2018 value. And we can see year over year, the total value of the global sports market continues to grow. And the value of individual sports teams from some of the largest leagues in the world have absolutely exploded over the past decade. And the value of teams from 2011 to 2020 in the NFL, NBA, NHL, MLB, and the Premier League has increased in value by over 500%, which is absolutely insane. And these sports teams are a scarce and premier asset. They're not making more. All of these leagues have set teams, and each and every year, they don't really expand those numbers. And the existing franchises continue to grow in value because of how scarce that resource is in our economy. And this ETF has an expense ratio of 0.75% and owns 36 different companies. And it is broken down where around 51% of the ownership is in pro sports teams, then they have apparel and equipment, pro sports leagues, SPACs, and then media and other. And we can see on the geographical exposure, 53% of the fund is based in the United States, 13% from Italy, around 12% from Germany, Britain, Turkey, and other make up the remaining countries. And the top 10 holdings include MSG Sports, Formula One, Manchester United, Juventus, Borussia Dortmund, Liberty Braves, Nike, the WWE, Adidas, and Fenerbahce football. So overall, if you're a sports fan and you want exposure to that industry and you want some ownership of some of the top professional sports teams all across the world, then this is definitely an ETF to take a look at. For an expense ratio of 0.75%, which has been the same across all three funds in this video, you can get very nice exposure to some of the largest organizations in the sports, media, and apparel world. And if you believe that these sports teams are going to be premier assets for decades in the future, then this is definitely a fund to take a look at and may make a nice addition to an overall growth portfolio. And overall, in this episode, we discuss three very unique ETFs that are new to the public markets and are investing in companies with a very specific focus. Of course, the first one was Buzz, who scans the digital world and chooses the companies who are getting a lot of positive sentiment across millions of different channels. Then, of course, we have UFO, the new space ETF, and if you're a believer that there's going to be a ton of revenue generated from outer space over the next few decades, then definitely a fund to take a look at. And finally, we went over MVP, the Pro Sports ETF, the first of its kind, and if you're a big sports fan and believe the value of these assets will continue to appreciate in value over the long term, then definitely an ETF that may make a nice addition to your portfolios. So thank you for watching to the end. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, leave me a comment down below, and I will see you in tomorrow's episode.